Welcome back to US Stock Express. It's December 4th, 2025, and we've got a packed show for you today. So, what's on the docket? Is Morgan Stanley onto something with a trillion-dollar bet on AI's power needs? Could a shockingly strong jobs report completely change the Fed's plans? And which tech giant's big strategy shift is actually winning over Wall Street? We're breaking it all down, so let's get started. First, let's set the stage with today's market close. It was a real mixed picture out there. The S&P 500 managed a slight gain, up just 0.13%. Over on the Nasdaq, things were practically at a standstill, dipping a negligible 0.01%. But the real action was in small caps. The Russell 2000 jumped a solid 0.86%. And the Dow? It took a tiny step back, easing down 0.05%. A day of clear winners and hesitant losers. Now to our first major story. The job market just sent a seriously strong signal. New unemployment applications have dropped to their lowest point since late 2022. This isn't just a good number. It shows a labor market that's holding up remarkably well, and that puts the Federal Reserve in a real bind for their meeting next week, complicating any decision to cut interest rates. Speaking of pressure on the Fed, Wall Street is already betting on a different kind of pressure altogether, the massive energy demand from artificial intelligence. This brings us to Morgan Stanley's latest call. They've just initiated bullish coverage on Solaris energy infrastructure, betting on its pivot to power the data centers that will fuel the AI boom. It's a direct play on the idea that AI needs a monumental power-up. Staying in the tech and AI world, let's talk about Intel. The chip maker is making a strategic U-turn. After reportedly exploring a sale, Intel has decided to hold on to its networking and communications unit, NEX. The company's argument is that keeping this business is key for integrating its silicon, software, and systems to compete in AI and data centers. But the market's reaction was clear. Foregoing a potential multi-billion-dollar cash infusion wasn't popular, and shares fell sharply on the news. Now here's a pivot. The market did like? Meta's stock jumped over 3.5%, leading the Nasdaq. What fueled the rally? Reports of a major strategic shift involving deep budget cuts to its costly metaverse division, Reality Labs. This signals a much sharper focus on its profitable AI initiatives and core apps like Facebook and Instagram. After Reality Labs racked up massive losses, investors see this as a very pragmatic move toward financial discipline. Shifting gears to healthcare, the Cooper Companies is having a phenomenal day. The medical device giant saw its stock surge 14.5% after a blockbuster earnings report. But the news didn't stop there. COO also announced a formal strategic review to unlock shareholder value and named a new board chair. Together, this paints the picture of a company entering a fresh, aggressive new chapter. Over in the retail sector, bargain hunting is proving to be a very profitable strategy. Dollar General's stock soared 14% after the discount retailer reported a huge earnings beat and raised its full-year forecast. This is a clear sign that its value proposition is resonating, winning over budget-conscious shoppers from all income brackets. Not all earnings reports were clear wins, though. Hewlett-Packard Enterprise delivered what we call a classic mixed bag. While they beat profit estimates, they missed on revenue. What really spooked investors? A surprising dip in their crucial server business that overshadowed the profit growth and led to a cautious outlook, sending the stock tumbling. And in the chemicals sector, LyondellBasell is in the spotlight for a tough reason. The stock took a significant hit, dropping 6% in a single session. A move this sharp suggests investors are reacting to either broader economic pressures or some company-specific concerns that have put LYB on the back foot. Finally, let's look at market access. The stock posted a solid 5.1% gain recently, but a new analysis is throwing some cold water on the rally. The stock received a lukewarm hold rating, with analysts labeling it the inferior value pick compared to a key sector rival. So while the price is up, the question is whether investors are now paying a bit of a premium. That wraps up today's market update. Thank you for watching US Stock Express. Stay informed, do your own research, and we'll see you next time.